It is Monday, October 17th, 2016. This is Ron Feinstein, the Consummate Price Behaviorist at New Wave Forecasting. Starting off as we usually do with the crude oil. The call for the courtesy dip today looks outstanding at the moment, and there is no change to the bullish assumption that a triangle pattern is setting up, and we are probably now in the D-wave swing and should chop our way higher for a little bit before ultimately terminating probably below 50 bucks. So the play here appears to be to try to buy it below 49.75 and risk the low and see what happens, because if this is a bullish fourth wave triangle, again, the market would be presumed to head up and out the top towards 52 or 52.50. So at the moment, still cautiously bullish on the crude oil. Okay, on the real-time update that I put out today, I noted the bear trap in the natural gas futures and suggested that was probably the bottom of an initial A-wave decline in what could be a much more complicated mess. So the one thing that's important to keep in mind here is, even though I think this top is not coming out, this market is supposed to go higher. So this is a very tricky situation. Again, kind of like the upside, at least thinking that we're going to visit 330 with a shot at 333 before heading back down, ideally towards 316, which would be just a picture-perfect conclusion here for a three-wave decline, wind up at 316, and then from there head above 340, at least basis this particular November contract. Okay, I have no changes whatsoever to the triangle scenario in gold, which I believe should now be in the final terminal E-wave and could once again head back up and test the 1262, 1263 level. If it goes above 1267, we'll see what happens. Again, I don't think this is a bottom, but I am going to respect what is pretty clear, and that is that there are a lot of buyers here. So we'll see if they can push the market up. I don't think so. I think the best guess is this is some kind of a little B-wave triangle here in E, and if this is the case, then it would pretty much argue that I don't know, shouldn't take much to fall out the bottom. 1252, 1251 ought to be enough. The breakdown itself, theoretically, probably not until somewhere below 1248. So again, ought to be the terminal wave right now in gold. This is a 90-minute chart. As I said on the daily update today, real time, I thought this market would top tomorrow. We'll see what happens. Okay, moving right over to the euro. So far, this forecast for a fourth wave courtesy rally is looking pretty good. I did suggest the high probability for a bear trap to set up below 110 the first time, and it's exactly what we saw. So, was it a big deal? Probably not. And again, to me, it's just a question of where you want to try to position on the short side, because there's every reason to think that this market is going lower, and the ideal sell is somewhere in the vicinity of 110.70, 110.80. And if the market's as bad as I think it is, we shouldn't even take out the most recent high, although I'm not saying by any means that it can't happen. But ideally, we won't take out 111 prior to heading on down towards 109.50. So courtesy rally scenario in the euro currency. The 10-year is not sexy, but, the analysis has been pretty good. We did dip a little bit more than 62% on the pullback, but I still think the best guess is that this is a market that really should go a lot higher, as I put out on the intraday update today. My immediate objective here, I think I said 131, although it really should be 130.30. That would be both the chart pattern objective and also a test of where the last big wave of sellers came down from. But again, I like the notes. I think this is a bullish setup, and see what happens if we can push above 130.08, and if anybody's going to salute or if it's just going to chop higher. That I can't say, but I continue to be bullish on the 10-year. High risk courtesy dip paying off. Okay, moving over to the stock index futures. I It's talking about the possibility of a visit to 2115, which was the 76% retracement on the E-mini S&P. We did not get there, and based on the amazing way this RSI support line is holding, I don't think we're going to, although it is earnings week. So anything is possible. One of the things that a lot of people don't understand about wave counting, real time anyways, you just can't know how certain things are going to lay out, whether this rally is ABCX or WX or A and B is still ongoing. It's just simply impossible to know, but things do look good to me, and I think we are still headed towards either 2147 and or 2157. Those are, I think, the most likely scenarios. And again, it's earnings week. To think that you're going to get a huge move one way or the other, unlikely. And again, don't want to be short this market because there really isn't a lot of reason to be particularly bearish. You know, like I say, it's a real shame that we didn't get 47.75 in the E-mini NASDAQ today. Perhaps we'll get there tomorrow. I don't know, but this market too looks like it is going higher, and this is consistent with my view that we should head back up towards 48.70. And maybe more. Again, this is a very tough call. Normally, diagonal triangles signify the end of a very important wave, but again, that doesn't mean we can't add another 40, 50 NASDAQ points onto this thing and then just head down from there or continue to go sideways. So I like the market. Don't think we'll see 47.75 at this point. It's still possible, but unlikely. But I'm guessing here 48.75 is the upside objective. So that's the wrap here for me today. Ron Feinstein, Monday, October 17th, 2016. New Wave Forecasting, real-time update in the morning. Back for the daily video tomorrow night.